Hello, welcome to Spy Money. Let's talk about the SpyBot cross indicator, how it can work for you, and how I use it in my trading. I actually use the Ranger indicator with it. It makes it even better. So let's get over and take a look and see how we could use it. So this is on Friday's open, and if we go back here, the open right here is at 9:30 a.m. Eastern time. That's what I'm on. And you can see how the cross is showing direction. So when you look at the candles by themselves, it's sometimes hard to figure out where it's going to go. But when you have a color-coded indicator on there, it allows you to be able to, take a trade or enter a trade and see where it's going to go from there. So on this one, I'm using a 200 tick, and this is a pretty good tick that you can use in the opening market. It does a pretty good job. So on this one, we are going to show some profits, of what you could have made and why you would enter where you are. So let's go ahead and show, let's just play the open. Let's just say we're going to play the open on it and let it be. So on this one, we would actually enter a trade as soon as we get a candle to close above. It will turn green. So in this particular case, our green candle would have started when this popped up and then come down. We turned green on the bottom of this candle. So that would be our entry. So right there is our entry. So let's draw an arrow there. That would be the entry based on the cloud. So once we entered right there, and we would not exit until we either hit our profit target that we're looking for, or if it breaks down below. So in this case, when we started coming down, come over, and then we had this one right through here, our stop would still be down here because we're at 710, and that's 701. I use a 15-point stop, 60 ticks. That's what I use for MQ because of the way it runs. So on this one right here, maybe you took profit up here. So let's just say that it started coming down and you didn't like it. You put your stop there. There's 205. Me personally, I would have not taken profit there. I would have let this play out a little more. We're at the open, and when it pops up like that and we start seeing this, it'll usually run. So me personally, I would not have taken profit there. I would have my stop down here, and I would let it play out. So as this goes up through here, and it pulled in here, but we shot back out, our cloud's still green. This one over here, we got a red. So right there is about where I would be taking profit. So if I do that, that's $610 on the first trade. Another way you can trade this is if you play the lower lows and higher highs. So this one, we have a lower low right here. So as soon as this comes down and starts coming up, my stop would come up to here. That's the first place it would go. So my entry's right here. My stop is right here. As this goes up, maybe I take profit in through here. I don't know. I probably would not. I am a scalper, so it's hard for me not to take profit when we get a run up. But when this pulled back and then run up, then my stop would be right here. So I would keep on doing that as we go up. And if I'm okay with making money right here at the least, which is 265, that's still a good trade. Then when this pulls back and goes to take off, maybe I just move my stop up to here. So I can even bring my stop halfway between or whichever if I wanted. But if I'm playing lower lows, my stop is going to be here. And then as it keeps on going up and pulls back to here, then I'm going to bring my stop up to here. So in this particular trade, until we get a good red signal, that's a slight red, and possibly I might have got out there, but it was red right here, and then all of a sudden it spikes up, and that's what made it turn green again. So in this one up here, when we have it go back up and then starts coming down, we see this red one. Maybe we take our profit right there because we're already way into the profit, so we can afford to take a smaller stop. So this one is $1,090. My goal per day is to make double my investment. So if I'm trading one contract I want to make at least $1,000 on NQ. If I can double my investment every day, that's all I need. That's all I want. That's my goal. I'm not saying I don't trade anymore, but I'm just saying that's my goal. Once I'm hit my goal, and then the next trade, maybe I take a little riskier trade to try to make more. But I want to make sure that I'm making enough to where if I do lose anymore, that I can always secure my $1,000 trade. So in this one, we pull back, and let's just say we did get stopped out there, or let's just say we let it pull back to here, and then it takes off. When it does, then our stop is going to be right here. So there's a couple of ways you could play this. If you do this, then you'll be at $7.95. That is still a lot of money. But if you're looking for your $1,000 goal, maybe when it gets up to here, maybe you start chasing your stops and you take your $14.85. That's usually what I do. Is once I hit my target, which would actually be, let's see where $1,000 would be. Right there's $1,000. So maybe I take my profit here when it starts coming back, and then I take it there. There's 810. I might have taken it there. In this particular case, possibly might have. Once it gets up there close, or right there is 980. Once it gets up to there, then maybe I move my stop right there, and then I take 875 on this trade. The goal is to make your goal per day. That's what you want to do. So if you're trying to make $1,000, you get up there kind of close, and it looks like it's pulling back. You take your profit, and then you get in on the next one. So if I would have just chased my stops up through here, and what I mean by that is these candles, as it goes up and closes, I just keep moving it up, and I keep going up. So when this one closes, and then this one here opens, then I'm going to keep my stop there because it's too far away, because you can see how the trend is going. And then when this comes back to there and then starts going up, I'm going to go ahead and bring my stop up to that one. Then this one, then this one, and then that one. And then when this pulls back down, I'm going to be at roughly $875 in profit. So the way I look at it is I will get the money on the next trade. Because if this pulled back and I'm at $875 and it pulls back to $500, I'm going to be sick about it because I didn't hit my goal. So now I'm looking at half the trade. So now we've got a lower low here. So what's to say we can't get another trade there? So once this closed up, we enter a trade on that. And then once we enter it, we keep on going up. And we get up to here, and we're chasing the candles again. We're up another $700. So now we're going to be up, so call it $709, about almost $1,500 right there. So now we've got $500 worth of money to play with to maybe make a little better trade. Now the way this cross works is if you are in a bullish movement, you only take the longs. You do not take these little shorts because you'll get caught. So on this one, when it pulled back and went to here, and we made a higher low, then it goes up to here, and now we make a lower high than what's right here. So we made a lower high. Once that happens, you can actually enter a trade, a short, right here. So once you come down and you break through that, once you've made that lower high, and you come down and break through, and you've got a red cross, then you go ahead and enter a trade there. So by entering a trade here, that would get you right there. And you come on down, you keep coming, and then once you have a certain amount of money made, you can just chase with your stop. So on this one, your higher highs here, you enter here, and you would not have a stop all the way up here. Your stop would be just, say, I don't know, probably about right here, right across that pullback. And then as this comes down and keeps on coming, you can actually put your stop as soon as it pulls back to here. Put your stop right there. So if you bring that across, and then if it starts selling off, and you can get this little pullback, then you can go ahead and move it down to here. because you got that pullback there, and then when it comes down, so right there is where your stop would be, and you get stopped out there for another 1360. So you would have 3 trades and be up roughly, what's that, roughly $2,900 from rolling through there, $2,800 or $2,900 between these 3 trades, and you wouldn't have any losers. And how we did that is using this cross so we know the direction and we know the entry. So on these, your cross will really help you out as far as knowing how to get in. And then if you follow with your lower lows and higher, lower highs and lower lows, if you follow that trading style, that's going to help you with knowing, should I be getting in this short, and if I do, where should I get in? So using this cross indicator will really help you as far as determining where to go. Now I use this with the Ranger indicator, and this is on the website too. You can buy both of these at the same time. So actually, let me have to turn on previous, because I don't show previous days when I trade, and since this was last Friday, so right here is our previous days. So we're looking at, let's see here, I've got to turn on to the US Open, because I'm trading London right now. So I'm going to turn that to US Open. There we go. So in this right here, this is in our open range breakout. With the Ranger alone, you don't trade in this area. But with having the cross, you can actually trade in here. And once we went up and made a high for the open range, that is a very good indication that when we pull back and we come up and make that lower low, we don't make a new one. That's a good indication we're going to keep going low or short. So, and when we come down here, right there is where our low was. So when we hit this area and then we broke through, that's a good reason to possibly even take a profit right here, which we ended up making a little more money just following the rules. But right in here would have been a good support to have gotten out even. So once we get out of this shaded area, then our open range breakout is done, and now we're ready to trade the Ranger. So I'm not going to go into a lot of details about the Ranger, how to trade it, because this is about trading the cross. But when you see this, you can actually get in a long right there, because we're bouncing off of our open range low, and since we're bouncing off from it, there's a good indication we could go long. I would not be going long until this trade here. So I would take a long there. And the reason I would, let's do this, make it bigger for you. The reason I wouldn't is because we need to break this high right here. Once we break that, and then we come back down, and then we break again, our higher high is right here. And with it being there, when this comes up, I probably would have entered a long right there. Now that would not be the best trade, but I would have had my long in here, and when it come up, I'd have my stop down here. But when it pulled up, because of having this right here, this yellow line, that is our open range breakout middle. So since we have that and we got up there kind of close, you know, maybe I bring my stop up or not, I don't know. This is an area in between this yellow line and the yellow line up on top is can be choppy at times, so you got to kind of watch it. And that's where the Ranger comes in handy. It lets you know to watch yourself. So maybe when this pops up, I just go ahead and bring a break even up here just to protect what I've got there. So this one I wouldn't have made any money on, but I wouldn't have lost any money. On this one right here, since we end up making a higher high, we would not be taking that short. And then when we come up, you know, we're just consolidating through here. So if you look at it this way, when we're going up, when we come through here, right there is where our short entry would be. Maybe or maybe not you take it. I would not take it just because it is above this yellow line here, and we're just kind of chopping along through here. So I would not be taking that. And then as it goes through, we come all the way down. We're thinking, well, I should have taken that. So that was actually a good trade. That's about 35 points. At this point, I'm thinking I should have taken it because that is an entry for the Ranger to go short. But it's a bad entry because of the way it did. This one right here I would not be taking, mainly because of where we are with the Ranger. Now, if I had not had the Ranger on, I would have entered that trade, because when we come down, we had our pullback, and now we're selling off again. I would not have taken any of these longs right here at all. Okay, so if I'm not looking at the Ranger indicator, I would not have taken this long right here. It did make a little money, but I would not have done it. I would have waited, and I would have got in short here. Now, to show you the Ranger indicator with the cross, to give you an idea of how it works, is right there is our entry on the Ranger. Well, when we come down and we bounce here, we bounce there, bounce here, bounce there, and we turn green, that's a good indication to get in. When we just keep on doing that, you might have even got in right there and had your stop down below. So, which would have been a good entry. Because, you know, when it come down and you start bouncing up, maybe you took it right off of that Ranger indicator alone to go on up because it's just bouncing. When you use this cross and you look at the past history of the trend, it will actually help you. Maybe you didn't take the trade until you got up here, which is breaking that higher high, and then we got a lower low, but we end up breaking right here. Maybe when it popped up and come through, you hop back in. When you have this yellow line that on the Ranger, that is a really huge support resistance line. So a good thing to do when you're trading this Ranger is maybe you don't enter this trade at all. You could have made money, but say you don't enter that, but when we break through and then we come down, you can have your entry right across the top of this one to go long. That is a good entry spot, because if it breaks that, it's going to go probably to at least right here. In this case, it kept on going. So when it went up and then it pulled back right here, then your stop would go up to here. And then when it went up, pull back just a little bit, then I would probably move my stop to right there. I would be trying to get this as quick as I can, and when it went through here, I'm going to bring my stop right up through here. Actually, it would be right there on this level right here. That's where my stop would be. And once we broke through there and we pulled back and then we took off, my stop would come right up to here. And then as we push up, we pull back, we push up, I'm going to have my stop on this one. And then on the Ranger, when you break through a level, you bring your stop up. So in this case, we hit that one right there, so that would actually make our stop right on this level here. That's a fib level. And then when we pull back, we didn't get stopped out. We ended up taking off. We pushed through it. And once we pushed through, we could, if we wanted, bring our stop right up to here, which is what I would have done. Because when you get that close to that level, I will bring it up to here. So in this case, if you had followed the rules, your entry would have been right here, and your exit would have been right there, and that's another $1,740. So that's how you play this indicator. And if you play it with the Ranger, you're going to do a lot better job at trading. Now, the Ranger indicator will only work like on this one right here if we take this and turn it on the London market. So let's say you're trading in the morning time. So if you're trading before the U.S. market, you're going to see how you would play this one. This would have been two good trades right here, or just one good solid trade. So if we play this one over, if you played the London market with this, your entry would be just under that yellow line. Well, you have a cloud up here as well on the cross, so that's actually a good place to be in. You could have stayed in until this cloud turned green. So if you wanted, I wouldn't have, because I'm a scalper. It's not the way I trade, but your entry would be there. And if you played this out until you got a green, which would actually be right here, there's $2,395. Now, I would not have been in that long, and I definitely wouldn't have allowed it to come all the way up here. When I hit this zone, right there is where my stop is going to be. That's the way I play it. And I teach how to use this Ranger indicator in other videos. So, and if you buy the cross and the Ranger indicator together, you get a better discount. So that would help you out. But when you buy them, I actually give video instruction. I also show pictures and such to where you know where to get in and where to get out on the Ranger. The Ranger is based on levels. It's not a lagging indicator like the cross is a lagging indicator, but it works really well. As you can see from right here, it didn't turn green until the price is up here. So there is a lot of money on the table right there before you would get out. You would actually got out there. That's $950 before the cross would have got you out. But when you have the Ranger indicator with it, you have these zones that are in here. So when it breaks through a zone and goes on down, then you go ahead and bring your stop to the bottom or to the top. And then when it gets down to the next one, you're at the bottom. And then when you push through that, you're at the top. So your exit would have been there based on how we trade. So these zones are automatically there. So just to show you, I'm going to go down here to remove all drawings. That removes everything on the screen that has anything to do with a drawing tool. So if we come over here and we look at drawing objects, you got regions there, so we can just go ahead and take out all of these. So we don't need all those. I don't even know how all those got in there. That may, you know what, that may be the indicator that did that. Let's see what happens here. It may not let me do it because of the indicator. Let's see here. See, it's saying the indicator or the strategy created, so we'll say no. So what that was all of these areas here, that indicator puts one on there. But I never actually drew anything on there. As we come down, remove all drawing objects, then it will remove anything that I had put in there. So I just want to show you that it is the indicator that does this and not me. The way we trade is if it's between the yellow lines, based on the Ranger, we do not trade it. If it's above, we go long, and if it's below, we go short. And then I explain how the different levels will actually work with that. If we take this all the way back over to present, which is right now, we will see that we have these labels over on the side. So it tells you where they are. We've also got different labels on the side to let you know what it is. These are fib levels, so it tells you what they are. Now, one really cool thing about this indicator that is good is we have a time zone. So if you're not in Eastern time and you're on, say, Central, we have a lot of people in Texas. If you're on Central time, it will automatically change these times according to you. So you pick whatever time zone you want and it will do it. It's really, really good. And then once you do that, then you want to come down and pick the market you want to trade. So we got the US, there's 5 markets. You got at 8 o'clock at night is Australia. Hong Kong is at 9:30. India is at 30 minutes after midnight. And let's hit and then you have the London market at 3 a.m. and then US at 9:30. So you pick what you want and it'll automatically change the times for you. So it kind of dummy proofs it for you. Makes it where you can actually not have to worry about it. Now, if you have your own times that you want to run, you go ahead and put it on manual up here, and then you type in whatever you want. So it works really well. It's very user friendly for whoever wants to use it. And then you can check mark the different levels on here that you want. I don't have all mine turned on. There's some I just don't need. And you can customize the labels on them and so forth. So there's a lot you can do with this indicator. And the risk reward is a really good one. If you trade a 1 to 5 risk reward, then you just check that. And then when you come in here, and if you are trading a 1 to 5, there's your 1 to 3, and there's your 1 to 5. So it automatically puts it in there for you. And we also have our stop right here. So this is our stop, and that green line right there is our entry. So the green is our entry. The yellow, anything above that is long. and our greens are entry, and then we have different levels that we can go to. When you use the Ranger indicator along with the cross, it gives you a very good confidence level to take that trade or not. If you are in, like this one right here, we've already broke through, we come down, we can actually enter a trade, say below this yellow line. If we entered there and we put our stop right up in here, and then just kind of let it play out, and then as it goes down, you make more money. So in this case, if it's coming down, we would say be along through here, right on that yellow line. I like to get below the yellow line, but let's just say it's right there. And our stop, I usually use a 60 tick, which would be right there. So our stop would be here. And then as this comes down and we have that high or lower high, and then as we come down, I'd bring my stop to right here. And then as we come down, we push up, I'd put my stop to right here. And I would just keep on bringing it down until we get hit. So in this case, when we break through here and go down below it and we pull back, my stop would be here. Once we broke through this fib right here, I'd bring my stop back to right here. So there's $445 that we would have made using the cross with the Ranger. Whereas if we were on the Ranger alone, we would not have had that trade. So using the cross actually helps you as far as knowing where you can go. Now, in this case, you wouldn't have to take your profit there. You could still have your stop, say, right up here around break even, because when you start getting below this, it will usually just sell off. So right now, if you'd have held on, because your cross is still red, so right now you'd be up 755 on this trade. Now I wish I was in that, but I was actually making this video. So that is a trade that I would have entered on. And I would have been fine on the trade because I'd be up 755, and we haven't even gotten to the US markets yet. Now, I usually won't trade somewhere between 820 and 835 because there's usually a great amount of volatility that comes in right around 830. So I usually just try to either have my exits, my stop kind of close to where I don't lose that profit because it may reverse and just take off on you. But if it drops real hard, I want to just go ahead and start moving my stop with it real quick. Now this is trading 100 tick. You can, or a 200 tick. You can trade this on 100 tick as well. It works real well. And you can see our entry would have been different. So our entry on this one would have been right there. And our exits, it would have chopped you in a little more. But once you come down, this first trade would have been $295 there. And then you would have got in another trade right here. So when you got in here, so you've been up, called $300, and you got in again, right, actually, you wouldn't get in right there. Let's see, this come down and started coming back up. So your red would have been right here. Yeah, right there is where your red would have been. So your entry would have been right here if you would have done just by the cloud. When it starts coming down, I would be looking to go short under the yellow line. But if you played the cloud only, then you would be going short here. You'd have a little bit of drawdown of, let's see, there's 80. So you got 11 points drawdown, so your stop would not have been hit, but you got a 15-point stop. Then as this comes down, comes through, comes up, comes down, your stop would be right here as it comes down, but once it starts going through here, I would be a stop right here. So there's another $300, and then as this comes down, our Ranger says to enter short here, so I would be in a short right there. And when this comes down, my stop would be here, because when we break through here and then break through this zone, my stop immediately goes to here. So right there is 320, 620, call it 915 right there. $915, 3 stops trading on the 100 tick. So if you have any questions or anything, let me know. This works really well. The cross and the Ranger probably my favorite because it gives a very good visual of what's going on. And you can trade the cross by itself. So if you're not in, say you're waiting on the open range to actually hit, you can actually trade the cross if you work it with the higher highs and higher lows, or vice versa, to where you can see the trend. I have an indicator that's going to be coming out that's actually going to be making the higher highs and higher lows. That should be out here within a couple weeks. So I was hoping to already have it, but I don't. But if you have any questions on this, let me know. It is a great indicator. I hope I explained it well enough to where you can understand how to use it. But on the contact page, let's see here. If you do, I'll show you where to get in contact with me. If you come up here to the contact, fill this out. That comes to me. No one else answers it, but that comes to me. The products, if you just type in Ranger at the top, or if you type in Ranger, it will pull up a couple of different variations for you. One, you can buy the Ranger indicator by itself. You can buy the SpyBot mover with the Ranger, which we did not talk about, but there's a video that explains how this one works. Today's video was with the Ranger and the cross. The cross is more conservative about your entries than what the Ranger is, or the mover is. The mover with the Ranger will actually get you in quicker, but sometimes you have to kind of watch it a little bit more because it will jump in sometimes a little bit too soon. Whereas the cross, it will usually wait around a little bit and it's more conservative. It is a delayed entry though compared to the mover. The mover will actually get you more profit if you're right about getting in. Cross will make less money, but it is more conservative as far as your trade, as far as getting you in. I personally use both of them. Here lately, only thing I've used is the cross. I think it's a little bit better in the sense of not making so many mistakes over what the mover is. So I like the cross real well. Now, if you want, you can actually type in cross, and then it will pull up the cross indicator. If you just want to buy the cross indicator alone, then you can do that as well. So we also have it for the TOS, the Thinkorswim platform. We have it for that as well. But the SpyBot cross works really well. And if you had one indicator to buy, I would choose the Ranger because it trades levels. It's not a lagging indicator, where any kind of a moving average type indicator like this, or momentum, or whichever, it's lagging. Prices already moved before they move. But the Ranger indicator, it's there before the price actually gets there. So I like it real well. And if you have any questions, like I said, just hit the contact page up here. Be glad to hear from you. Any questions, if you need to talk to me about it before you make a decision, just let me know.